Hi, I'm Nur Haizam Abdul Aziz. You are watching Weekly Review on Capital.
Hi, and welcome back to the Weekly Review with me, Nora. So now, Singapore has long been the economic hub for the Southeast Asian region. Having a stable growth year on year makes it an attractive country to invest into. So another plus we can see is in its banking sector. So though growing at less robust pace this year, but it's still in the double-digit growth. So T.A Securities Holdings Berhad T.A Research said loans and advances continued to advance, but at a less robust pace of a 16.3% year-on-year versus an 18.4% in June.
T.A Research in its note recently said from a month ago, total loans contracted by 0.1% after rising at marginal pace of 0.1% month-on-month in June. In July, loans were mostly driven by the domestic banking unit, DBU, which advanced at a healthy pace of 1.3% month-on-month. On the other hand, T.A Research said the Asian Currency Unit, ACU, dipped 1.7% month-on-month and 12.2% year-on-year. By segment, drawdown by businesses fell 0.6% month-on-month after rising for 2 consecutive months in June. T.A Research said 5 out of 8 key business segments recorded sequential declines compared to only 3 in the previous month. It said credit extended for general commerce and manufacturing contracted after registering positive growth for 2 straight months. Meanwhile, utilization rate climbed 30 basis points to 57% from 56.7% in June. It said this is on the back of a 20 and 50 basis points increase in utilization of limits granted to the business and consumer segments. T.A Research expects the low and stable interest rates environment to continue to be supportive of lending activities. Year to date, prime lending rate and mortgage rates stayed unchanged at 5.38% and 4.08%, while rates for hire purchase fell 15 BPS to 3.29% after staying at 3.44% for the past 7 months. Meanwhile, T.A Research said deposit rates also remained stable during the month with 3, 6 and 12 months fixed deposit rates at 0.14%, 0.20% and 0.32% respectively. It said total deposits recovered to broaden by 1.2% month-on-month. To recap, total deposits contracted by marginal 0.1% in June. It said credit cards make up a small proportion of around 4.2% and 1.8% of consumer and total loans respectively. T.A Research is maintaining an overweight stance on the Singapore banks. In terms of stock picks, the research house have buy recommendation on OCBC and UOB. T.A Research continues to believe that the system's fundamentals are intact and should remain resilient amid the potential headwinds.
I think it's partly affected by the headwinds, external headwinds. But then again, the slowdown is within our expectations because I am projecting loans growth of around 11 to 12% for the full year. So it is within. There will still be growth, but again, at less robust pace for the remaining part of the year. Towards my projected loans growth of 11 to 12%. I think sentiments are quite buoyant for the Singapore property market. So I think growth in this segment should be quite sustainable for the remaining part of the year. Housing market is also quite strong at this stage. Of course, depending on certain segments of the market, of the property market. I think we're pretty well balanced also. Between consumer and businesses, it's about half. Quite equal, 50-50 between businesses and consumers. Yeah, which is what I mentioned earlier. I did say that probably part of the reason why they've been growing, but at a less robust pace, is because of this external hit. I don't think the increase in bad debts written off here has much to do with them being money conscious, because bad debts is really a reflection of how the asset quality is. But overall, asset quality in Singapore, I feel, is pretty healthy at this juncture. The increase in bad debt written off here is also specifically for credit cards, and I don't think this will make a very big impact to the sector. Then again, I did mention in my report that credit cards only make up a very small proportion of the consumer loans in total, around 4%. It depends on which area of investments they go into. Of course, every type of investment has its pros and cons. So, yeah, I mean, in that sense, Singapore, they do offer quite a bit of products and solutions to meet customers' needs, investment needs. So I suppose, yes, I think our banks here are also coming up with quite a lot of products and, investment solutions for clients here to attract investments here as well.
Well, that was T.A Research Analyst Wong Li Hsia on the line commenting on Singapore's banking sector. Right then, so Weekly Review takes a short breather right now. Don't forget to send us your feedbacks on the show at weeklyreviewcapital@gmail.com or #weeklyreviewcapital on Twitter. After the break, so Maxime Borov's going to tell us what sector should we invest in and get higher returns. Stay tuned with us.